Hello, everyone. I hope you can hear me now and you can see the screen.
Yes.
Okay, so
Yes,
first of all, okay, perfect. So first of all, happy 2023 to you all. And I hope the upcoming year is a really great year for you in all aspects of life. Okay, so in today's session, I'll simply go through some basic aspects about mutual fund investing. I'll clear some misconceptions and just tell you how mutual fund investing is actually done. And after that, I'll show you a little glimpse of what I'll be teaching in the first program soon, this month most likely, with respect to investing. So long-term investing, I've divided that into two parts. The first is basics and portfolio management, and the second will be stock picking. So this month I'll launch the first one, which is basics and uh, portfolio management. So I'll give you a glimpse about that also, so that you know what you are going to learn and how detailed I've made it for your knowledge. So, and after that, you can ask your questions after both these things are done. After that, you can ask questions. So let me start off with the mutual fund thing first. So firstly, it's important to understand that mutual fund investing is primarily a goal-based investing tool, which means it is used to achieve goals, financial goals, right? And that is the most important aspect about mutual funds. So they should almost exclusively be used, or rather, I would say they're the best asset of all to achieve future goals. Now, why? Because they're easy to invest in. So you can invest through SIP modes every single month. You can simply, let your money buy mutual funds. You don't have to select new funds every month. You don't have to manually invest. You can simply set an SIP and it can just keep going on forever. So it's very easy to invest in. But most importantly, it's easy to withdraw from. So let's say you have 20 stocks, 25 stocks, 30 stocks in your portfolio, and 10 years from now, you want to withdraw because you want to fund your goal. Now, the problem is which stocks to sell, how much to sell. It becomes a very difficult thing. Plus, in the process, you start with 20 stocks, maybe after 10 years, you have 50 stocks. So it's very difficult to, first of all, invest in stocks on a regular basis. And secondly, it's even more difficult to withdraw if you have to withdraw a certain portion in terms of what to sell and how much to sell. That's not the problem in mutual funds. You can easily invest and you easily withdraw, which is why mutual fund is I would say the only asset that is used or should be used to fund future financial goals. Another important aspect is that its returns can be reasonably estimated. Obviously, nobody can accurately estimate returns, but if you have a fund that you select which gives 15% historically, you can reasonably expect it to give 14 to 16%, maybe 13 to 17%, somewhere in that range. So you can reasonably expect or estimate what kind of returns you're going to get through a certain mutual fund investment, which is not possible in other assets. Even in stocks, it's difficult because if you have 25 stocks, there is really no way to reach a conclusion as to how much the portfolio would give you a return over 10-15 years of time horizon. So that is again very difficult to estimate with respect to direct equity, but that can be done in mutual funds. So these 3 points combined make mutual funds the best and the most ideal asset to invest in if you want to achieve goals. And everybody has some or the other goals, there's no doubt about that. So that is why mutual fund investing is purely a goal-based investing tool, which is unfortunately not how people look at it, because they don't have the correct knowledge about it. Now, let me talk a bit about inflation. So obviously there's a general inflation in every economy, in every country. But the two most important uh, inflations that you can talk about are medical and education. Now, medical inflation is estimated to be around 8% in India, which is, you could say, 3 to 4% more than the normal targeted household inflation. So medical inflation is always higher than the normal inflation. Now, if you don't have um, a corpus with you for future, the problem is that once you enter the old age and you don't have an enough corpus, this medical inflation, because costs for medical aspects increase in the old age, they're very high in the old age. So if you don't cater for this, or if you don't take this into account in your investing, it can impact one's life most in the old age, which is the worst thing that can happen. You're 60, 65, 70, 75, and that is when you're finding that you need a lot of money and you don't have that, you don't have those assets to fund your medical expenses. Plus, at that age, mostly, almost, I would say for 95%, maybe 99% of people, there is no income. There might be a pension, but there is no income. So that becomes another factor. So why you should focus on mutual fund investing in a proper manner is because medical inflation is one thing that can hurt you in the old age. Second is education inflation, and that is estimated to be around 10%, which is almost twice the general inflation. This is even more important, I would say, because if this is not planned for, it can lead to significant liabilities. So if you don't plan for your child's education at the age of 18, 19, 20, and what can happen? There can be a few scenarios. So first could be that your child wants to go to a private university, or maybe go to a foreign university, or he selects a field that is expensive. So the first option is you might not have the funds and you might say, no, we're not going to educate you in this fashion. So that is very tough for the parents as well as for the child. Second option is whatever savings you have, you put those entire savings into the education of your child. And that leaves you absolutely with zero savings. So you have to start from scratch at the age of, let's say if your child is 20 years old and you are, let's say 45. So at the age of 45 to 50, you have to start fresh and start accumulating savings again. The third could be that you have little savings, you put that into the education, plus you take a loan, education loan. Now, if you do that, you obviously have to repay the loan. So if you take some of the burden, obviously it adds to your problems because you already have spent your savings, plus now you have to pay a loan. And once your child gets educated, he or she they will start doing a job, and they will start to pay the loan out of their income. But at the age of 20 to 24, 26, whatever it is, whenever they get a good job, they're at a stage where they have the highest risk appetite. They can take risks. They have a very long time horizon. They have no liabilities. They have no dependents. They can take risk, and they're at an age when if they start to save and invest, they can create enormous wealth in the next 15, 20 years by the time they're 40, 45. But at this point in time, what's happening is that because there's a loan, they instead have to they have to pay that loan, which leaves them with a situation where their income or their savings is being directed to paying a loan. So in the early years of their earning life, 5-10 years of their earning life, at an age when they should be saving, they're instead putting that money into a loan. So their entire finances are thrown out of order. So that is why education inflation is an absolute must to be planned for. If you have it, especially if a child is born, immediately, if you start from that day itself, you have to invest a very, very small amount to get a sizable amount 18, 20 years from that point in time. So education inflation is very important, and this is one goal that should absolutely be looked at for investing purposes through mutual funds. Because if you don't plan for this, I've just explained, it can really be a great trouble for you financially and for your child as well. Now, there are two types of goals. Just a minute. I'll open this file again. Can everybody see now? Is the screen visible now?
Yeah, sure.
Okay. So
Yes, it is.
So there are two types of goals. One is limited and the other is continuous. Okay. Now, what is a limited goal? It's basically a goal that is determined for a specific point in time, and the corpus that you create is withdrawn to fulfill the goal. Okay. I'll explain the types of goals also in the next slide. But basically, you identify a goal at a specific point in time of your life, and then you withdraw the corpus that you have to fulfill the goal. A continuous goal is one that does not end at a specific date, and the corpus that is created is withdrawn over a period of time to meet the goal. Okay, so this will help you understand. So what are the broad types of limited goals that you can have? Buying a house, buying a car, vacation, expensive one, starting a business, maybe child's education and child's marriage. Why? Because for all these goals, you need a certain amount at a certain date from today. So you want to buy a house 10 years from now, you want to fund your child's education 20 years from now, you want to go on a vacation 15 years from now, whatever it is. But you need an amount certain years from now, at which point in time you will withdraw your investments and fulfill that goal. So that is a limited goal, right? It ends at a particular date. A continuous goal, the most important type and probably the only type of continuous goal is retirement planning. Why? Because it does not end at a particular date. So if you're 40, you want to retire at 60, it does not mean that at 60 your retirement will end or your goal will end. In fact, it starts at 60. So it's a continuous goal. It will go on for the next 15, 20, 25, 30 years. So like I said, the corpus that you create is withdrawn, but over a period of time. So here you withdraw the corpus over 15, 20, 25, 30 years. Continuously, you have to withdraw something. So you can understand the kind of corpus you'd need. In this case, you need a specific amount at a particular date. But here you need to fulfill the expenses for, let's say, 25 years. So you can imagine the kind of wealth you need to create to be able to fund your entire post-retirement expenses. So these are the broad two types of goals. And see, these goals, some people may have, some people may not. Okay. Some people might have already, their children might already be educated and married, so they don't have these goals. They might have enough assets. They have a car, they have a house, they have enough money, they don't need a business, and they don't really need any vacation as such. So these goals might differ from person to person. Not necessary that everybody has these goals. You might have one, you might have two, three, depends on from person to person, age, assets, dependence, a lot of factors. But retirement planning is one thing that is common to everybody. If you're 40, you need to retire at some time. If you're 20, you also need to retire. So if you're 40, 45, 50, you need to retire at 55, 60. You need an amount, right? You might have other assets, that's fine. Unless you're a millionaire, that's a different case. But if you are normal Indian family, you need money for retirement. So if you're 40, 45, 50, you need an amount at the normal age of retirement, 55 or 60 mostly. So you need some amount at 60, let's say. If you're 20, it does not mean that retirement is not a goal for you. You might want to retire early. So you might look for a goal, a retirement age of 45. So you're 20, you might look for 45 as a retirement age. So you have 25 years left. So you can look to retire early, 15 years before normally people retire. So retirement planning is a goal that is common to everybody. So what I'm trying to say is, you cannot have a life that does not have any financial goal. It might not be as explicit or clear as these limited goals, but at least you will have retirement planning as a goal. That is 100% sure. Again, unless and until you have a lot of assets or a lot of income generating asset, not just asset, because if you have real estate, you cannot generate income from it in the sense that unless you rent it out, but you cannot generate income from gold or retirement from real estate. So you need an asset that can give you an income for retirement. So this is a must goal for everybody. So this is why I'm telling you that you need to look at your future in terms of goals and not just putting money into mutual funds and thinking kaun sa fund le, because most people just think that, and most people ask me that. The only question that I get with respect to mutual funds is, which mutual fund should I buy? And I tell them, I'm sorry, I cannot advise you, because buying of mutual funds is not done in this fashion. In the next slide, I'll tell you what is the process of, actually moving through the process of mutual fund investing. So first, I take a limited goal. Okay. So what is the process of how, we go through this, through achieving this goal? So first is we determine an adequate corpus for the goal. So let's say 20 years from now, you need funds for your child's education. You say you need 50 lakh rupees. So we determine you need 50 lakh rupees 20 years from now. First step. Second step, reverse calculation is done for various rates of return. What is these rates of return? The rates of return that mutual funds generally give. So from 12 to 20%, a reverse calculation is done that will tell you how much you need to invest from today. How much amount is needed to be invested from today at various rates of returns to achieve this corpus. Okay, so you'll have different figures for 12, 14, 16, 18, 20% returns, and you will get an idea of how much you need to invest from today to achieve that goal. And finally, funds are selected suiting the goals and the risk profile. So people focus only on this step. This is the only step that is in the minds of people कि fund कौन सा ले. But अगर आपको यही नहीं पता कि पैसा डालना कितना है, तो fund लेने का कोई मतलब नहीं है, because you might actually be needing to invest 10,000 rupees a month to reach a goal, but you're investing 2,000 rupees. Now you might invest that 2,000 the best possible fund that is there, but it still won't make a difference because you are way short of your ideal investment. You might select the best fund in the market. It does not matter. It's not going to cover up for that 8,000, that difference of 8,000 that you're not investing. So fund selection is obviously important. I'm not saying it's not important, but understand this, that a bad fund can always be managed. So if you select a bad fund, you can change it in a day's time, right? You have, let's say you've invested for 2 years in a fund. It's not working. Fine, you shift the fund. But let's say you need to invest 10,000 for the next 20 years to achieve a goal. For the first 5 years, you're investing just 2,000 rupees. After 5 years, I do an analysis for you. And I tell you that, okay, you tell me you need certain funds 15 years from then, because it was 20 years, but for the first 5 years, you've invested 2,000 rupees. And then after 5 years, I do a calculation for you. And I tell you how much you need to invest for the next 15 years to achieve that goal. That 10,000 amount, which was actually needed at the beginning of 20 years, has now gone up to 25,000 because आपने 5 साल में बहुत कम invest करा. So now you need to invest more to achieve that goal. Now, if you select a bad fund, you can change it, but you cannot just come up with 2.5 times the investment in a day. So if you were investing not 2.5 times, in fact, 10 times, because you were investing 2,000 rupees. So if you're investing 2,000 rupees for 5 years, and then according to the calculation, it comes out that you need to invest 25,000 every month to achieve the goal 15 years from now. Where will you bring that 10 times extra investment? You cannot, nobody can just increase the income in a day. So if you don't invest properly in terms of these 3 steps, there is no shortcut. But for this, obviously, you have selected a bad fund, fine, you shift the fund in a day's time, not a problem. But if you're investing low and you don't know how much to invest, you will never be able to recover that time because you cannot simply create income out of the air. So this is why it's important to understand that fund selection is the last step, and it's not a difficult step at all. It's easy. क्योंकि उसमें कोई बड़ी चीज नहीं, आप गूगल पे भी देखोगे तो आपको बहुत फंड्स के नाम मिल जाएंगे. You can select funds. That's not a tough aspect in today's life, in today's times, because you have so much information. Okay, but these 3 steps, these are the most important steps, because you actually need to know how much you want to invest. Otherwise, you are not using mutual funds in the way that they're meant to be, because there is actually no asset that can be utilized to achieve future goals. You cannot, have you ever heard anybody looking to achieve goals through FD investments, putting money into FD? No. You cannot achieve money, you cannot achieve your future goals through real estate. You cannot put money into an apartment today and say, I bought this apartment for 20 lakhs, 10 years down the line, I'll sell it and pay for my child's education. That is not going to happen. There are so many reasons for that. If I go into it, I'll spend half an hour speaking about that. But you cannot achieve your goals on real estate. You cannot achieve it on gold. You cannot achieve it on fixed deposits. The only way, even direct equity is difficult, like I just explained, because it's difficult to estimate how much returns you will create, which stocks to withdraw in the future. That also becomes a bit, difficult. So mutual funds is the only asset which can help you to achieve your goals. But what's important is you should actually know how much you need and how much you have to invest. If you don't know that, it's like just walking down a path without, you don't even know the path and you don't even know the destination. You don't know either of the two things. So, or maybe let's say you want money for your child's education. You have the goal in mind. Okay. You want to go to Bangalore from Delhi, but if you don't know the path, how to go to Bangalore, you're not going to make it. So that's kind of, the way people are investing in mutual funds. They know what they want to get very vaguely. सिर्फ चीज का नाम पता है कि भाई बच्चे के लिए पैसा इकट्ठा करना है या रिटायरमेंट के लिए पैसे चाहिए, लेकिन रास्ता उसका पता ही नहीं है. So that is what I'm trying to tell you here, that you need to know the path. If you don't know the path, you're not going to succeed in your future goals. Now, the next type of goal that I explained is continuous goal. And the example is retirement planning. Now, this is very, very significant, and it's even more complicated because you're actually needing money for 20, 25, 30 years, not just at a particular point in time. So here are some assumptions that I've taken. A base scenario. So let's say somebody's current age is 40 years. He wants to retire at 60 years. And the post-retirement period is 25 years till the age of 85. Okay. And the inflation rate has been taken as 6%. Now, it's very hard for me to explain the process that is initiated to, come down to a certain figure about how much you need to invest, but I'll try to explain it as simple as possible. So first of all, the current expenses are carried forward based on inflation. So you reach a figure. In this case, if your expense here is, let's say 10,000 rupees, what will your expense be 20 years from now when you're 60? That's the first step. The second step is a rate of return is determined for the post-retirement period. So whatever wealth you have created at 60 years, that will also grow for the next 25 years. But at what rate it should grow, that is something that we estimate. After that, we do a reverse calculation and we determine a corpus that is needed at the starting of retirement. So using all these figures and all these calculations, again, it's very difficult for me to go into that in detail, but a corpus is determined that you need at 60 years. Matlab 20 years from now, you need a certain corpus, which if you keep withdrawing every month, that will fund your 25 years of retirement. And then we do another reverse calculation like we did in the previous goal at various rates of return to come back to 40 years to determine how much you need to invest from now to create this corpus at 60. Now, this is something only somebody who's learned this can do. A common person cannot do this calculation. But it's what I'm trying to do here is tell you the importance of this calculation, because fund selection is the last step. You might select a fund which has given 16%, it might give you 15% or 14%. Yes, it would affect your goal, but that can always be compensated. But if you don't know how much you need and how much you should invest, none of your future goals will be achieved, because you are either investing less or you're not investing appropriately. There might also be a situation where you need to invest 5,000 rupees to achieve your goal, but you're putting 15,000 rupees. So that can also be the case. So you are over investing. So what you can do is continue 5,000 in your mutual funds, start putting 10,000 into a more risky asset, which is equity, for example. So you start putting 10,000 into direct equity, but it's all about managing what you're investing. And that can only be done if you know how much you have to invest. If that is not clear, then you won't be able to achieve any goals. And like I said, there is a goal for everybody. कुछ ना कुछ गोल तो सबका होता ही है, वो सोचने पे आपको खुद पता चल जाएगा क्या गोल है आपका. आप 2 मिनट सोचोगे, you will understand what kind of a goal you have for the future. And if there's absolutely nothing, you'll at least say that I need some money for retirement. That's the least that you'll want. So you understand that these calculations are not easy, but these are most important, and nobody is doing these calculations because there's a lack of knowledge. I'm not saying there's a lack of knowledge on your part. You cannot learn this because you have not studied finance, but this is not even present for for people in the finance industry. Most of them don't even know this, and thus the people advising you, they are not telling you this. Even if you go to a broker or somebody, I can guarantee you most of the brokers won't even know about this thing, and they will just tell you ki, is fund mein paisa dal do, us fund mein paisa dal do. There are people who are in the mutual fund industry for 20-25 years, and they don't know how to do this, and they just simply tell you kitna paisa dalna hai, aap batao ki 10,000 rupees, theek hai, idhar dal do, idhar dal do, idhar dal do. But how much do you need to invest, how much you actually need in the future, that is the foundation of where you're going to invest. You cannot just invest blindly. So my motive is to help you understand that the process starts from determining goals, not from selecting funds. And mutual funds should always be used to fulfill some or the other of your future goals. And again, these calculations are not done by people. They cannot be done by people because they're complicated, and which is completely understandable. That is why I recently started the mutual fund initiative, where I'm doing this guidance for people. So I help people, through these calculations, and I even create a portfolio for them, because it's very difficult for me to teach these to people. Maybe sometime in the future I will, but at this moment I cannot teach these calculations to people. It's difficult. So right now what I've started is whoever is interested, at least I can help from my end in terms of guiding them with respect to these calculations. But my motive through this short slide or presentation is that you need to understand the importance of determining goals, how much you need for the goal, and how much you need to invest for that goal. Unless and until you do that, what mutual fund you select is of very less importance. So it's important to understand that mutual funds you can obviously do for wealth creation. मतलब purely आप इसलिए भी invest कर सकते हो कि आपको सिर्फ wealth create करनी है. But that is in case you already have other assets. You have a lot of assets. You have enough for retirement, enough for to achieve all your goals. If that is the case, then you can do it purely for wealth creation. So whatever savings you have, you put into the mutual funds. Then it does not matter how much you need to invest, because you are simply doing it as an extra investment. But if you know that any of your future goal is not completely met, and you need some or the other funds for a future goal, this process has to be done on the basis of the process that I've explained. Otherwise, you will not achieve the goal. And it's always important to, sometimes what happens is people don't want to go through this process because they feel worried as to what kind of figures will come up. So, what if I need to invest 30,000 rupees a month to achieve my retirement goal, but I can only invest 10,000. So they start worrying, I'm investing just 1/3. So I'll not be able to achieve my retirement goal, and hence I'll not be able to fund my retirement. This fear is something that keeps a lot of people back. It drags them back and prevents them from actually going through this process. But it's better to have some fear now and deal with it, rather than deal with it 20 years from now, 25 years from now, when you're actually at that point where you need money and you don't have enough money. Then you cannot do anything. So it's better to sort of know what is the reality now than to have a shock 20-25 years from now, right? So this was about mutual funds. I'll just get down to the presentation, not the presentation, just what I'm going to teach in the first investing program soon. And after that, you can ask your questions. So I'm still creating this program. And like I said, I'll be talking about basics and portfolio management. This will be the first part. Second part will be stock picking. That will come later on. Now, this is the foundation for anybody who is actually interested in doing long-term investing in a proper fashion. And these are things that people don't teach, because most people don't have the knowledge of how to go through this process. Just like I explained the mutual fund thing, because I've done CFA from the US, this is my specialization. So I know how one should go about this process, about how to create a portfolio, and what are the investing concepts that you need to understand to be a good investor. So I'm still working. There's still content to be added, but let me just give you a glimpse of what I've already added to the program. So basics, okay, why to invest, the concept of compounding, market capitalization, sectors, industries, business cycles, and some concepts that will help you understand what investing is basically about. Then the types of investing: passive, active, dividend, value, growth. Then we come down to the time horizon, how the investing activity differs with respect to time, and what kind of assets you need to select with respect to the different time horizons. And these are very basic things. These are not interesting things, or, I mean, if I tell you today to buy a penny stock that will give you 100% return in 1 month, everybody will be interested because usme ekdam paisa ban raha hai. Lekin if I tell people how you need to create a portfolio, how you need to go about creating a portfolio that will create wealth for you in the long term, people are less interested. They don't find it as fascinating. And this is something that has changed because, the people in the finance industry in India, they have, I won't say brainwashed, but they've sort of tuned the people into, they've reduced the time horizon of people, the mental time horizon of people, and they've pushed them towards being more interested in short-term returns than long-term wealth creation. So सबको trading में interest है, सबको trading करनी है, सबको intraday भी करनी है. Everybody says to me, I want to, get 1,000 rupees a day in intraday trading, but they don't understand the risks involved. So everybody is, sort of shrunken their time horizons, and they just want to earn money in a few days or few months or few weeks, but they don't understand that long-term investing is the way to go for everybody, because not everybody can do trading. Not everybody has the time, or I mean, if you're doing a job, how can you watch the monitor? How can you watch the screen every day for 3-4 hours? You cannot do that. So trading is not for everybody, but investing can be for you, because you don't need to watch the screen every day. Even if you look at your investments 6 months, every 3 to 6 months, that's fine. So that is why I'm trying to push people towards long-term investing, because that is what actually creates wealth. There's a very popular saying in the markets that trading makes millionaires, investing makes billionaires. You'll not find a single trader who's a billionaire, but you'll find many investors who are billionaires. So there must be some reason behind this, because in trading, you are always cutting down your profits. And I'm not saying you should not trade. You should trade if you have the time and the inclination towards it, because it's very, very good to create an income. But if you cannot do that, then your focus should be purely on investing. And investing, you're letting compounding come into play. You're giving it more time. So over a period of 10, 15, 20 years, you can create a lot of wealth, which you would never have imagined you could actually create. So I'll also be teaching some basic things about economics that you need to understand with respect to investing. Then I'll move on to the portfolio creation process. This is something that I can guarantee nobody's teaching. And it's actually, this is how professionally it is done. It's actually called the investment outlook statement. So I'll teach how to create an investment outlook statement for yourselves. And if you follow this process and you invest according to this, in the sense that if you go through these steps, you will have, you will be able to do investing in such a disciplined manner that you'll be surprised as to how well you can now view this aspect of the market instead of how you were looking at it earlier. Right now, everything is like, stock, you buy a stock, ठीक है, ऊपर चला गया बेच देते हैं, नीचे चला गया रख लेते हैं, ऊपर आ जाएगा, इस तरह की thoughts होती हैं. But once you understand what you're doing, why you're doing, and how you should do investing, everything will clear up. And these basics are more important. Again, everybody focuses on stock selection. जैसे mutual funds में मैं बोल रहा था, everybody focuses on mutual fund selection. But what happens before that is more important. Similarly, in stock investing, what happens before you select a stock is more important. How you have to create a portfolio, how you have to go about executing your portfolio, how you're going to review it. These are the things that matter most. How are you going to diversify your portfolio? These things matter most. And only when you do this, can you actually create wealth. So I'll teach the entire portfolio creation process. I'll teach diversification in depth. So advantages, disadvantages, what is correlation, types of risks, how much you should diversify, everything in with respect to diversification. So the entire concept will become clear to you. I'll also tell about alternative asset classes like debt, gold, equity, international equity, REITs, and even real estate. I'm going to add that now. So alternative assets, and I'll also create a sample portfolio for you. So this in itself is, you can see, over 100 slides. So for this, this is a course for me that is about financial literacy, not about, it's not, I mean, this is something that everybody should know, in my opinion. So that is why I've kept the fee at just $9.99, because I want everybody to go through it, everybody to learn. $9.99 is absolutely nothing for anybody. It's nothing for me. It's nothing for you. But it's important that, I keep a fee, because then only people respect the efforts that I've made. And if you put something into something goes out of your pocket into something, you respect and value that thing more. You don't take it for granted. So $9.99 is absolutely nothing for anybody, but it can really turn around your understanding of investing. Once I've completed this, I'll start working on stock picking. So you can actually use this session, this course that I'll start in this month, to modify your current portfolio. And then later on, when I start stock picking, because stock picking is a very, very detailed and broad subject, nobody can cover it entirely. Nobody in the world. Hundreds of books have been written, and everybody gives a different perspective. So everybody has a different way of investing. So it's absolutely impossible for anybody to cover everything with respect to stock picking. But I'll try to create a program that is, that captures everything important about how to pick stocks. And that will be later on. But this is what I'm working on at this particular point in time. So whenever I start this, I've actually shared a Google form in the group also. If you want to get informed when I start this, please fill that form if you have not already filled it. And once I launch this, I'll inform you about this. So yeah, so these were the two things that I wanted to talk about. Now you can ask your questions. You can ask with respect to investing, trading, anything.
Hi, Vinayak. This is Tulasi Raman. Actually, what about the Public Provident Fund and Suganya Samruddhi? Because I already started 5 years back in the PPF and Suganya Samruddhi.
See, if you have started, I won't. I mean, it's a reasonably good tool. If you have started, then
okay.
I won't ask you to. And I don't think you can withdraw it also just like that. There are some emergency, you can only withdraw on certain occasions. So if you've started, then it's fine. I won't tell you not to do it. But if you have not.
But comparing the mutual funds, the returns on that PPF and the Suganya Samruddhi is lesser, but it is a fixed.
Sorry?
Comparing the mutual fund returns and the percentage, the PPF and Suganya Samruddhi is lesser returns.
Yeah, mutual funds returns are more, definitely.
Yeah.
Because even if in a mutual fund you invest in an index fund, which simply tracks Nifty or an index, even those funds give 10, 11, 12% returns. So these, see, anything that will offer you a fixed return or a fixed corpus at the end has to have a low rate of return. But mutual funds don't promise anything like that, because it's not like if you invest 10,000 in mutual funds today, they promise you they'll give you 1 lakh 10 years from now. That's not the case. That is why they have the possibility of giving you more returns. So anything that promises you a certain amount at a later stage will give a less rate of return. So you have safety there, but you have less returns. In mutual funds, you have greater returns, but I won't say there's less safety, because generally people think that equity has less safety. The safety is less only if you have a short time horizon. If you have at least a 10-year time horizon, 8 to 10-year time horizon, the safety in equities is as much as it is in other forms of assets. Plus, you get a greater chance of returns.
Okay, thank you.
Vinayak, how about the placing in that mutual funds? We have differences of that mutual funds, and also we go through the different brokers, right? So just to go for that mutual funds, right? So how this differs between the DAT and going with any of the brokers?
Yeah, I mean, see, frankly speaking, direct mutual funds obviously have a benefit because the expense is less, so they'll give you higher return. But regular mutual funds are okay if somebody is guiding you properly, in the sense that if they're guiding you in a proper fashion and helping you with the entire process that I just explained, then if they ask you to go through a regular fund, then it's fine. But if you're doing on your own, then obviously you have to opt for direct.
Thank
Yes.
you, Vinayak. Got it.
Yeah. Yeah.
Sir,
Hello.
how about investing in equity directly?
Direct equity investment.
Okay.
Your voice is not clear. It's breaking up.
Investing directly in equity.
Can you please type your question?
Okay. All right.
Okay, so till the time they type the question, yes.
Yes. Can you hear me?
Yes.
How about
No, it's still breaking.
invest?
Please type the question. It is still breaking up.
Oh.
So till the time they type the question, how did you
How
like?
about investing in directly in equity?
Okay, so see, firstly, if you want to invest directly, you have to have a long time horizon, at least 7 to 8 years.
Yeah, exactly. For 5 years.
At least 5, ideally 7 years, but 5 is also fine. But
5
then
years, okay.
yeah, at least 5.
Minimum 5 years.
Yeah.
Or okay, 7 is also okay for me.
Yeah. But you need to be able to pick companies. You need to be able to understand them reasonably well, and you need to be able to create a portfolio in a proper fashion. So actually, that is what I in the course that I just explained.
Yes.
That's what
Sir.
I'm going to teach, how to
Okay.
create a portfolio.
Sir, can you? I will tell you my example. Okay.
Yes.
I bought HDFC Bank shares.
Right.
IPO.
Right.
100 rupees. They give me 100 shares at the rate of 10 rupees.
Right.
I invested 1,000 rupees in HDFC Bank way back in 1996. 1996.
Right.
Now I have now it becomes 1,000 shares now.
Right.
My investment in HDFC Bank at the 1996 was 1,000. Now it is 16 lakhs.
Right.
Yes.
Right.
Shall I keep?
Is the I mean, you are already investing for such long periods of time. So I mean,
Yes.
actually the way to go to just put into good stock and just forget about it, and that is how you create wealth. You couldn't have imagined creating this wealth through short-term. I'm not saying
No.
cannot,
It totally.
But I'm just trying to say that for people who cannot trade, this is the way to invest. If you keep it, you'll make money.
Yes, I just kept.
Yes.
And I forget it. Today, it is fetched me for 1,000. It is fetched me of 16 lakhs 40,000.
Right. Exactly.
HDFC Bank.
Right. Exactly. You can still keep it. No issues.
I will keep it
Yes.
for lifelong.
Yes. Absolutely. Yeah.
Thank you, sir. Thank you.
Thank you.
Hello, Vinayakji, can I speak?
Yes.
Okay, very good evening to you, and thank you for conducting this show. Conducting this session. It's been so valuable to me. And I think I have also contacted you over WhatsApp some time back about investing in mutual funds. Say, I have about 30,000 to invest consistently, say, on a monthly basis. And that I have around 7 to 8 years horizon. Keeping in view my daughter's marriage, say at the age of 4, she's now 17, say and about 25 is the time I'm planning. So, okay, if that is the case, 7 to 8 years is my time horizon where I have to generate this corpus. Could you just suggest me a suitable, say, I don't know what to say about, but I would like to invest in mutual funds. So I have one in Canara Robeco small cap, which is doing pretty well. But I would also like to create a portfolio other than what I have presently in Canara Robeco. If you could suggest, it will be very helpful to me. Thank you.
Okay, yeah, no issues. Firstly, like I just explained in the program, that yes, you have a goal, you have a tentative time horizon, but it's very important to understand how much one needs for it and how much one needs to invest. So you can invest 30,000, maybe that's more than what you need to invest, maybe it's less. So those calculations and everything, just please drop me a message and I'll guide you with respect to the entire process for my
Sure,
needs.
sure. Yeah, my
Right.
purpose will be
Thank
around.
you.
I am looking for.
Thank
look-
you.
Hello. Can
Yes.
I-
Hello.
Yes.
Hello.
Yes.
Hello. Yes.
Can I have some messages for you?
Sorry.
Can I put some messages for you?
Your voice is again breaking up a lot. Please drop a message.
Okay, fine. I
Hello.
will WhatsApp my
Okay, no problem. Yes.
Okay.
Yes, I wanted to ask that there is certain in the NSE there is something as Nippon ETF. So can we invest in that?
Yeah, if you want to invest for long term, you can go for ETFs, no problem. But don't go for sectoral ETFs.
Huh?
Don't go for sectoral ETFs. Go for ETFs that track the market, Nifty or some index.
Which is the best mutual fund for equity?
Again, that, like I said, that is not something I can answer, because for every person, based on their needs and their risk profile, mutual funds are different. So that is not proper to answer. Yes.
Okay.
Yes. Yes.
Okay. Thank you. Thank you.
Anybody who has
Yes.
mutual fund, see, what I am doing through my initiative is that I'm guiding people with respect to all these factors. If you want to sort of take guidance through me, you can drop me a message. The process for me is simple. You have to open an ICICI Demat account with me, and the reason is very simple. By opening an ICICI Demat account or a Demat account with me, the thing is that, one, I get to view the funds that I've shared with you or I've asked you to purchase. Secondly, if you're doing goal-based investing, your investments for that goal should be separate. That is the only prerequisite for this process. I don't charge any fees for this or anything. It's simply my small initiative to help as many people as possible. Just like the process I explained to you with respect to goals, I do the entire planning, and I've actually created proposals as long as 8, 10, 12 pages for people, just so that they can understand what they need to do, how they need to invest, where they need to invest, and how much they need to invest. So I simply don't respond, or I don't entertain questions about, in the sense that what mutual funds to buy or which to change or stuff like that, because that's not the way it is done. So if anybody's interested in the process that I've explained, you can message me. Otherwise, you can ask general questions. Yes. Any other questions?
When I able to hear me?
Yes.
My question is, you already have mutual funds which put in some particular stocks, right? So why can't you have those stock itself in a portfolio for like a kind of placing a SIP, same as mutual funds, and you directly placing in the equity itself? I mean, basically, we won't time the market for sure, because mutual funds, they're going to time the market. But what I'm saying is, okay, there are 10 companies where the mutual funds are putting money, SDFC, Reliance, or all the things.
Yeah.
And same way, they're going to pick you the money itself in the stock directly instead of the mutual funds. How is that?
You're basically talking about manually putting money into these stocks on a regular basis.
Where the mutual funds pushing the money.
Yeah, I mean, You can do that. If you if you are disciplined enough to do that, you can definitely do that. The problem is that people find it hard because see, if you have through this course that I'm going to start, I have created a sample portfolio. It has 20 large cap companies for people who want to invest. So that's what you're saying is exactly something that I've done there. But the thing is that if you have 20 companies, if somebody finds the 21st company, they get greedy and they want to buy that also. And then soon from 20, it becomes 30. From 30, it becomes 40.
That's
And
true.
that is the problem. That is the discipline is the problem. Plus, how often can you put money into companies manually? Which stock you have to put today, which stock you have to put next month? It becomes a difficult process. That is why mutual funds are easier. But if you can manage this process, there's absolutely no issue. You can definitely do that as long as you maintain the allocation for a stock to the portfolio. It's a good idea, not a problem at all.
Got it. Thank you, Vinayak.
Yeah. But you have to select a certain pool of stocks and invest only those then.
Yeah. That's true. Thank you.
Somebody's asking about investment in Nifty. You can invest through index funds. You can buy an index fund which tracks Nifty and you can put money into that. So whatever return Nifty will give, the index fund will give nearly as much return, just slightly up or down, but you can invest in any index fund and it's very easy to find. You can just search Google for good index funds. You'll find names of many. Can you explain about having proper portfolio? What are the points to consider? What kind of portfolio are you talking about here?
Hello.
No.
Sir, actually, I'm new to the this thing session, so I'm just new to the just got interested to invest in mutual funds. So I don't have any kind of this thing. I'm new learner. So if any suggestion how to create a mutual fund portfolio and the points to be considered for that one.
So you've entered into the session late?
Yeah, no sir. I just entered on time.
Okay, right.
Okay.
Right.
But still I have some confusion. So if you can elaborate, that will be helpful for me.
No, like I said, you have to first determine the goal. Then you have to determine how much you need for that goal. Then you have to calculate how much you need to invest for that goal. And then you have to start buying mutual funds. So that is the only thing that you need to consider. And again, fund selection is done on the basis of how much a person needs to invest and what is their risk profile. So it's not simply about picking mutual funds and putting money into it. Like I said, you might be putting 5,000, but you actually might need to be investing 10,000, but you don't know that because that procedure has not been followed. So that is where I'm helping people. If anybody is interested, you can drop me a message and I can talk about that in detail. But mutual fund, please, everybody, don't consider mutual funds simply as मतलब पैसा है तो डाल दो. Unless and until it's purely a wealth creation process, then it's a different thing. If you have all your goals met, if you have enough assets, then you can put 1,000, 10,000, 1 lakh rupees a month, whatever you have, into mutual funds. But if there is a goal in the future, you cannot blindly invest, because 99% of times you will not be able to meet the goal because it will fall short. I've seen so many examples in the last 3-4 weeks where one person said she needed 5 crore rupees 20 years from now. And when I did the calculation, that was for retirement. When I did the calculation for retirement, the corpus came to 9.7 crores. So she expected, or she wanted, or she thought that 5 crores would be enough. And it seems enough. 5 crores is a huge amount. But when the calculations were done, that came to 9.7 crores. So how much she actually thought she needed, she needs the double of that amount. So accordingly, the investments change. So the process is not reverse. It's not about creating a portfolio first. It's about understanding your goals and determining how much is needed to be invested.
Thank you so much, sir.
Yeah. Anybody else, if they'd like to say anything about the session or any question that you have? Right. So I hope the session was useful to everyone.
Yes.
Yeah, Vinayak, definitely. Looking forward for the new program.
Thank you.
Thank you. Thank you.
Thank you. If anybody has any questions, they can still ask with respect to anything. Okay, no problem. Great. So I'll share the recording also for this. If anybody needs the recording, please drop a message. I'll share tomorrow, day after maybe.
Vinayak, sorry, a little late to ask the question.
No problem.
So I've already been doing mutual fund investing for the last about 3 years. And in the last 3 years, if you look back at the returns of a particular fund, and you realize that in a portion of that time, a significant portion of that time, a fund is underperforming. And there are other funds that are performing much better than what may be the average returns for that category. Say it's a large cap or a small cap or a mid cap, whatever it could be.
Right.
And then you realize that maybe you need to move that money from that fund to another fund to get some better returns. How do you pick that other fund? Because you will always have data which is like the trailing last 12 months, 15 months, 1 year, 3 years, whatever. But that doesn't guarantee that this is going to be the returns in the future, like any other fund. So how do you pick that? How do you move from one fund to another fund?
See, in your specific case, you mentioned 3 years, last 3 years. Now, as it is, last 3 years they were extreme. From 2020, 2019, they were absolutely extreme years. So basically what happened is that in the last 3 years, there was no secular movement in the market, in the sense that it's not like every sector or every market cap was moving up. In the recent times when there was a huge rally in Nifty from 15,800 something to 18,000 plus, only the large caps moved and the small caps and mid caps did not move at all. So these market cap stocks did not work, which meant that their mutual funds did not work as well. So I think first of all, it's important to look into what kind of mutual funds you had which did not perform well. And you might find that, you just search that name on Google and look at their statements, their fact sheets and everything. Just go into the detail of those funds a bit and just try to understand what is the reason behind their underperformance. So it might simply be that they were heavy in a particular sector and that sector did not perform, but that sector might perform in the coming years. So it might not be useful to exit the fund. It might be because they were invested heavily in, for example, mid caps, and mid caps did not perform as well, but in the future mid caps will perform. And so you might not look to exit the fund unless and until it's a reason which, firstly, 3 years, like I said, last 3 years are very unique. So it might not be correct to judge a mutual fund based on last 3 years because of the absolutely different, unique kind of nature of the markets. So first, just try to pinpoint the kind of the reason, what could possibly be the reason. You'll find some connection definitely why they underperformed. Maybe, they were looking at, for example, in the last, I think in 1.5 years, value stocks have done a lot better than growth stocks. So value funds did better, growth funds did not do as well. So for example, look at PSU banks. That is purely a value play. It's not a growth play, because they were undervalued. So they started to move up. So any funds that had high allocation to PSUs did well. So the reason why the underperformance happened is, it cannot be simply pointed out to the lower returns. You have to look at the reason. And if you find that the reason is something which will continue to go on, or which might still hurt, the fund in the next few years, it is then better to shift into a new fund. And let's say, you've selected a fund that, just I'm giving an example, it's heavy in auto, and the auto sector did not perform. And with, for example, a potential recession coming, the auto sector will, again, it will underperform. So that there's a reason behind the underperformance in the past. There could be continued underperformance in the next 2-3 years. So it's better to shift this to something where into, let's say, Nifty, maybe Nifty index fund, or maybe into a fund that gives more weightage to pharma or FMCG or something like that. So it's important to understand the reason, and once you understand the reason, you'll be able to shift easily because you'll not
Come.
go for that thing which has caused the underperformance of the fund. Okay, so if there's anything else you'd like to say, you can say, and then I close the session.
This is just for the benefit of you and for others. This is that Mirai Asset Emerging Blue Chip Fund. You know, it's like been like a darling of the mutual fund industry. It's been performing so well. But over the last year or two, it's not been performing so well. And there are other large cap, mid cap funds. I think it's a mix of large and mid cap. And there are other funds which have done very well. So, and already they have restricted SIPs that you can do. Like even if you want to increase the amount of, hello? You can hear
me? The restriction is 2,500 rupees per month.
Yeah, 2,500. So like the way I tried to increase the allocation to that was doing 2,500 direct and 2,500 because I already had an existing investment into it through a securities company. So that way I'm able to only push it to 5,000. So then if I want to put more money in a large and mid cap segment, is it better to just exit it right now and then just pick something that's better and that will allow me to push it to say 10,000 or 15,000?
I think this fund has been performing so well. It has, I think, about it has about 21% return since inception. And just because 2-3 years have gone bad, I don't think it's worth exiting this fund. It's banking heavy, as far as I know. It's quite banking heavy, but it's private bank heavy. So it's not PSU bank heavy, and I think that is why it's underperformed, because the banking, you might think that because banking has gone up in 2022 itself, Bank Nifty was 20% up, but the entire move was brought about by PSU banks primarily.
Yeah, most of it was just PSU banks. Yes.
So that is one reason why this might not have performed as well. It has very defensive HDFC, Infosys kind of stocks, Reliance kind, these kind of stocks. So these are the higher weighted stocks. So I mean, I don't think, plus IT also, it has reasonable allocation to IT. So IT has obviously gone down significantly. So I think it's not worthy to exit as of now, because this might be a temporary thing. Overall, if you look at the banking sector, this fund is about 22% allocation to banking. And banking is really, I think it's one of the top sectors for the next 10-15 years, because the NPAs are going down. Everything is improving as far as banks are concerned. Fundamentally, they're getting better. So I wouldn't exit the fund, to be honest.
Okay, so just one last question. So this can be like a slightly higher risk proxy to like a Nifty index fund?
Yeah, you can say that. I mean, बुरे से बुरा भी क्या होगा, 15% दे देगा, but index funds से ज़्यादा ही देगा. So I think it's definitely worth continuing.
So there's no sense in like that fear of missing out and take this and move to another large mid cap fund.
I don't
already
think.
because I've been buying from some levels already.
Right. I don't think so. You should do. This has such a proper and rich history of giving returns since 2010. So every fund has 2, 3, 4 years of underperformance. I don't think you should exit. If you want, you can reduce some investing, but what you're doing into it, you might reduce that, but it's already just 2,500. So it's not that much as it is. But
yeah, it's not a significant amount, but that's the maximum that they allow.
Yeah.
So
exactly. So I don't think it's worth quitting as of.
Okay. Thank you.
Hi, Vinayak.
Hi.
Good evening.
Good evening.
Aditya this side. Okay, Vinayak, can you shed some light on the tools which we can use for analyzing mutual funds? And one particular tool which I regularly use is rolling returns over a large period, like 5 years, 7 years period, and taking it back and then proceeding forwards. Thank you.
Yeah, rolling returns is a good way to look at the performance of a particular fund. So I think that is the best kind of return metric that you can use to analyze a fund. So that's pretty good. I think you should look at 10 years rolling returns. That is pretty good. Otherwise, basically, I mean, your simple things that the older the fund, the better it is because it has a longer dependable history. If it has, you can look at the fund managers, if they have a lot of experience in the fund, in the markets, plus if they are in the fund for a long period of time, they've managed the fund for 8, 10, 15 years, then it's another good factor for the fund. See, I think these are the basic things that you need to look at. Rolling returns is absolutely perfect. What you're doing is good enough. But again, eventually the fund selection comes down to how it suits your risk profile and your investing, your goals. So if for example, again, I come back to what I've been talking about. If let's say you are needing to invest 10,000 rupees a month to achieve a goal, and you can achieve that goal at 10,000 rupees invested at 12% returns, for example. So you don't really need to go for aggressive 20-22% funds, because you are already, even an index fund will do the job for you. So once you have that clarity, automatically the fund selection changes. You can go for slightly lesser riskier funds. You can diversify funds across different sectors. So I think, see, fund selection is, I would personally believe it's quite an overrated process. You can look at the history of returns, that's fine. Rolling returns, 10 years. Manager experience, you can look at. The older the fund, generally the better it is. Plus avoid sectoral funds. Don't ever go for any sectoral funds. And then analyze it with respect to your own risk profile and your goals. Okay. So shall we close the session then? Okay, so I close the session now, and I think it was a good session. I think whatever I wanted to share with you, I've shared all those things. And just one thing that, please, it's very important to open yourself up to learning in the future, because eventually you have to be independent if you want to be successful in the markets. आप मुझ पे depend रहोगे, किसी और पे dependent रहोगे, you cannot succeed for a long period of time. You shouldn't even be dependent on me, to be honest. You should just learn everything on yourself and just quit my Volkswagen group. आप खुद कर सकते हो, उस स्टेज पर आप पहुंचोगे तभी जाकर आप consistently trading या investing या जो भी है वो आप कर सकते हो. So, it's very important to understand concepts and then start to apply them. And actually, it's not that difficult. Hota kya hai, bas people sort of have a block towards learning. Maybe some people have that block that they don't want to learn. But it's very important to open yourself up to learning, because that's the only way you can consistently earn, and you can earn on your own. So I tell this to every student of mine. There is you won't be able to name a single trader or investor who's made wealth by using tips or by depending on somebody else. Everybody is independent. So that is the path to being wealthy. And I just posted a quote in one of the recent blogs that I had written, that rich men don't invest in money, they invest in knowledge. So keep learning, and you need to apply it, but you have to learn the right things. And once you are able to learn the proper things and you start to apply it properly, you won't be dependent on anybody else. And that's the only way that you can actually make wealth in the markets. दूसरे पे डिपेंडेंट हो के आप कभी बना नहीं सकते. मैं लोगों को, जिनको मैं ट्रेडिंग सिखाता हूँ, उनको भी मैं बोलता हूँ कि मुझ पे डिपेंडेंट मत हो. मैं आपको आज ट्रेड दे रहा हूँ, मैं आपको ग्रुप में आज पोस्ट डाल रहा हूँ कि बाय दिस बाय दैट. Maybe after 3 years I move on to something else. What will you do then? Maybe after 3 years I have something else to do and I stop doing this. What will you do then? You'll find some other group, and then you'll start depending on somebody else, then somebody else. For how long can you keep this going on? So eventually, जो सीरियस है मार्केट्स में, जिसको एक्चुअली में वेल्थ क्रिएट करनी है, वो इंडिपेंडेंस की तरफ बढ़ता है. अदरवाइज दूसरों पे डिपेंडेंट होके तो कोई भी कितना भी चल सकता है. बट असली पैसा इंडिपेंडेंस अपनी खुद की समझ से ही बनता है, दूसरे की समझ से नहीं बनता. क्योंकि जो गलती करते हो वो भी समझ में नहीं आती कि गलती क्यों करी. इफ आई गिव अ ट्रेड टू यू एंड इट गोज रॉन्ग, यू डोंट हैव एनी आइडिया व्हाई इट वेंट रॉन्ग, सो यू आर नॉट लर्निंग एनीथिंग. एंड इफ इट गोज राइट, you're only making some money, but you don't know why it went right, so you're not learning anything. So in the end, your knowledge quotient or your knowledge addition is zero. You're just simply moving your money from here to there, which is okay in the short term, but never in the long term. Right.
Hi, Vinayak. May I?
Yeah.
I absolutely second that thought of yours, what you have been saying, and no reason why that was the only reason why me and a lot of other people have joined your other things what you have been teaching us. And absolutely true that even if you give us, like, obviously you have done your own kind of research or whatever study, but still now we who are older guys who are associated with you for almost year, 2 years, we do our own study also, like, obviously without any doubt that what you have done is right or wrong, but still because you have taught us. So,
Yes.
I mean, we apply that, all those logics and all those studies behind that,
Right.
just to know that, yes, what you have taught is right.
Right.
And have that confidence. And what you said is right, that tomorrow if you move on, then what? Next, move on to somebody else.
Yes, absolutely.
Absolutely true. The knowledge is most important.
Yes.
And thankful to you that you have been teaching us all this.
Thank you. Thank you very much.
So yes,
On a lighter note, her friend jaruri hota hai.
Yes,
Thanks. Good night.
I had a query that will you be teaching fundamental analysis for long term in this part of this course only, or another program?
No, next program. This one is about how to manage your portfolio, I just showed every topic to you. It's about understanding what investing is about, how to diversify, how to go about creating a portfolio. वो process कैसे करनी है आपको, वो पूरा मैं इसमें explain करूँगा, because without this you cannot see. I'll give you a simple example. Somebody, I would say maybe 8-10 months back, this person used to message me almost every few days that he'd bought the stock for Burger King, and it just kept falling, and he was making losses after losses. Now, why did he make loss? It's not because he selected a wrong stock. Everybody makes wrong investments. Even Warren Buffett has made wrong investments. But Warren Buffett has made wealth not because of wrong investments, but because of certain other discipline aspects related to discipline. What this person did is he put 40% of his money into Burger King. Now the stock started to fall. What could he do? 40% of his portfolio is in a single stock that is falling. There is no way the rest 60% of his portfolio is going to recover for that 40%, because एक ही stock इतना गिर रहा है तो बाकी stocks कहाँ से portfolio को ऊपर ले जाएंगे? So as long as this one single stock did not go up, his entire portfolio did not go up. He might have selected, आप एक एग्जांपल लेके देखो, आपने 10 कंपनी सिलेक्ट करी, उसमें से आपने 9 कंपनी परफेक्ट सिलेक्ट करी, एक कंपनी गलत सिलेक्ट करी और उस एक कंपनी में 50% पोर्टफोलियो डाल दिया, बाकी 9 में आपने 50% डाल रखा है. अगर वो एक कंपनी नीचे गिर गई तो आपका पूरा पोर्टफोलियो नीचे गिर गया, डिस्पाइट द फैक्ट दैट यू हैव अ 90% सक्सेस रेट इन अ वे. यू सिलेक्टेड 90% गुड कंपनीज. सो इट्स नॉट अबाउट स्टॉक पिकिंग. मैं आपको बता रहा हूँ और मैं ये कोर्स में एक्सप्लेन करूंगा. आप एक स्टॉक अगर अच्छा पिक कर लोगे तो आप 10-15 साल बाद बहुत पैसा कमा सकते हो. You just need to pick 1 or 2 good stock. It's not about picking 9 or 10, 90 or 80 or 90% good stocks. It's about picking those 1 or 2 or 3 good stocks. So stock picking is something that comes later on. What comes earlier is to understand how you have to actually create a portfolio. If you don't know the basics of creating a portfolio, if you don't know the mental approach to it, you will never be successful. And I've given this example in almost every session. In the 2000 late 1990s IT bubble, everybody was mocking Warren Buffett because he wasn't investing in IT stocks, and everybody was turning their money 2, 3, 4 times in a few months' time, and they were saying that he's grown old and he does not have the skills anymore. He did not put a single money into IT stocks. It was not because analysis was something different, but it was more about mental discipline. He knew that this is not right. Everybody's running after this one sector. Something is wrong. I will not put my money into it. So it's more about emotional discipline than about picking stocks. So fundamental analysis को again overrate कर रखा है, बहुत ज़्यादा overrate कर रखा है, because लोग का दिमाग इसी में जाता है. ट्रेड कौन सा लें, इन्वेस्ट किस में करें, म्यूचुअल फंड कौन सा सिलेक्ट करें. हम लास्ट स्टेप पे पहले पहुंच जाते हैं, उसकी फाउंडेशन क्या है वो नहीं समझते कभी भी. सो इट्स लाइक ड्राइविंग अ कार विदाउट टायर्स. ओके, आप इस बात को समझो कि आपके टायर्स तो है नहीं, फिर भी गाड़ी चलाने को आप जा रहे हो, कैसे चलाओगे. So in this session, in this program, I'm going to first teach how to go about the investing process. And then in the next one, I'll explain fundamental analysis. From step 1 to every step till the end, you will understand how the entire process goes through.
Okay, so it may be mid of coming year, this year.
I guess so, because I have to do an option selling course also before that.
Okay.
Yeah. Right. So I'll close the session now. And If you have any questions, anytime you can drop a message to me. And please, my request, please share the link to the group that you're in with other people. Please circulate it in your groups, because I'm not a marketing person. I don't come on YouTube and start speaking stuff just for followers. I am only on these few groups that I'm connected with. And it's only through you that I can expand my my groups. So please share the links to the groups that you're in through your circles, through your friends and everybody, and just ask them to join, because I think by now you're sure that, reasonably confident at least, that what I'm sharing is pretty genuine. And my intention is not to mislead you, because I'm not getting out of conducting this session today and misleading you. It won't do me anything good.
If one last thing, that if we are investing about, you can say, like you are saying, that 40% of our money or something like that of the capital into one particular stock. So if that stock is a large cap one, like Lance, or I had also shared that Orbindo, so is that fine, that yes, it will bounce back? So we should have patience for some time?
That's a very generalized question, because that depends from stock to stock. So, I mean, if you're talking about Reliance, if you're talking about companies like TCS, yes, those companies will bounce back. They have bounced back in the past. But when you're very sector specific, for example, like in pharma, Aurobindo Pharma, and as far as I know, I cannot exactly remember, but when this fall, I think it went down from 1,000 rupees, 1,100. When it started to fall, there was a negative news on the stock, and that news was something related to the corporate governance of the company. So I'll find that out. I think there was something like this. I can recall something. So if that was the reason, that there was something wrong with the corporate governance, that was the point to exit the stock. 1,000 रुपए पे 900 रुपए पे निकल जाना चाहिए था, because corporate governance में गड़बड़ थी कुछ, या there was some scam or something like that. I don't remember, but there was something. So it depends. See, if there's a technical fall, if the stock is falling because it has gone up too far, or if the market is down, that's fine. It comes up. But if there's something wrong with the stock itself, then you need to exit. Now that is again difficult to say, because every stock is different. Every news is different, and eventually वो news के हिसाब से आप entry या exit कर सकते हो. अगर वो फंडामेंटली स्टॉक को इफेक्ट करता है तो आपको एग्जिट करना चाहिए. अगर नहीं इफेक्ट करता तो कोई फर्क नहीं पड़ता, स्टॉक वापस ऊपर आ जाता है. Right. Okay. So I close the session now, and hopefully we'll take more sessions in the future like this. And just please, like I said, please share the links to the groups with your friends and family and everywhere that you are connected with in your circles, so that more people can join. So thank you everyone for attending, and good night.